Hello traders, this is Blake Morrow and you are listening to the week ahead video for February 28th, 2021. Wow, what a week we had. Before I get into what happened this last week and talk about what we're looking for going into next week, I have to say, if you haven't tried out ForexAnalytix, please do so. It's only $1 for 10 days. You get to try the premium version. Even if you decide to go with the light version, you still get the premium version. So make sure you download the mobile app, and you can get that at the App Store or the Google Play Store. And one other thing, guys, I know most of you watch these videos and you watch them every week. If you find this video and my analysis and our updates beneficial, please give us a thumbs up. Please subscribe to the channel. Please share it with other traders. I'd appreciate it so much, and so would our team. We work almost 7 days a week putting all of this free content out there for you. So if you appreciate it, like I said, please give us a thumbs up. It really helps the channel, the YouTube channel, and how we rank quite a bit. So thank you so much. All right, let's talk about this last week. And wow, what a week. When you look through like our overview screen here, and you notice all of these support and resistance levels are being taken out, like multiple, that means volatility is picked up. Because when we're doing analysis and whether it's myself, these are all manually updated, by the way, these support and resistance levels. It's not some algorithm. It is all manually inputted by myself or somebody from the team. And, we look at support and resistance levels and identify, whether it's, it's a fib level or a trend line or whatever the case may be. When they get breached, or a couple of them get breached at once or right after the other, that we're seeing some volatility in the market. It really is. And that's the beauty about what ForexAnalytix is. It's all human touch. It's not. The only algorithms that are involved in ForexAnalytix is the trend line indicators, or the traffic lights, you might call them. These indications are usually derived from what all the charts that we've posted and how we've labeled them, and then it spits out the color based on how many bullish charts or how many bearish charts we've posted and what time frame. But other than that, everything else is manually inputted, like all the analysis that you see here and all the charts that you see here. So, I don't think I've ever explained that to you guys. And so it's nice that you know what that is. All right. Let's talk about this last week. So what a move. The first chart I have to bring up is, the move in the 10-year. And, whether you're looking at the 10-year or whether you're looking at the 30-year, it's, you're looking at the bond market and saying, wow, what a move. But let's not ignore the fact that, and this is the 30-year bond market. Okay. And I just want to point out that since the beginning of the year, yields have been rising. They just really started to explode. It's like you think about how the stock market has really, taken it with a grain of salt, this move in yields. And we've seen, yields. Here's the 30-year yield. We'll just stop here. Let me delete everything there. So you can see yields have been kind of on the rise this year, but all of a sudden we got this exponential move, and then that was, at some point it was the breaking point of the markets. But it wasn't just yields. I have to point out that one of the things about currencies is every currency pair, not every, most of the dollar pairs though, hit some pretty important levels in reverse. So let's start off by let's just identify the Aussie dollar. So this is the COVID, this is the spike lower after the lockdown. This is where, the down trend started in December of 2019, spiked down in spring, and then we hit 161% extension of that move at 180, which, it's a round number. It's a big fib number. We hit the 180. We were divergent on relative strength. It's like it all came together for a reversal. And then the false breakdown led us to a move lower. And anybody who's long the Aussie right now is probably going, oh, wow, how far can this go? I mean, personally, I think, and if you've heard any of my analysis, the last several trading sessions, the one that I did with Chris Weston, the head of research at Pepperstone Securities, or even with my own team on Thursday and Friday. Yeah, I do think that the Aussie could slip back towards the mid 70 cent level. I do think it's going to be a great buying opportunity at some point. When you think about the Aussie and you think about, okay, I'd like to actually buy it. It'd be nice if the Aussie was the only instrument in the world that I had to trade and had to look at. But in all actuality, if you have risk aversion picking up and you have stocks, that slide from let's say just say 3,800 down to 3,200. Yeah, the last place I'm going to want to be is buying the Aussie as it's moving down in that direction. You know what I mean? So it's not this is not a situation where I go, okay, I'm going to buy the Aussie when we get to 74 cents, no matter what, because this is, the breakout point right here. I'm not thinking that. I'm thinking, yeah, we might find some support down there, but I really have to see what's happening with everything else. And when I say everything else, I'm talking about equities. I'm talking about gold. And by the way, if you look at gold, it doesn't look good. I mean, gold looks like we are pushing down towards below 1,700, maybe even lower than that. That's entirely possible. Everything that I see on my screen, and you guys have probably heard me the last several days, those of you that listen to me on a daily basis in our free webinars, yeah, I've been expecting gold to move lower, and we finally broke through that 1,760. Pretty key. You can see right here, breakout point, support, then we broke it. Should take us towards 1680. Again, and there are things, I guess the point I'm trying to make here is there are things that I was looking at that would suggest that we would turn. So it's not just the Aussie that we looked at earlier at the 80 cent level. I mean, you look at the dollar Canadian. This is the chart of the day from, let's go over to our blog. This is free to you guys, right? For those of you that are not subscribers. Chart of the day, February 25th. That was Thursday, right? 127% extension. And then the next day, I mean, boom. Now we're breaking out of the descending wedge. So I look at the dollar Canadian. Keep in mind that we do have jobs reports on Friday of this next week, which I'll talk about what we got going on in the week ahead. But we don't, Canadian job reports are not this Friday. So just a little heads up. Anyway, it'll be next Friday. The 12th, 13th, something like that. 12th. So anyway, descending wedge, breakout reversal, and this, if you guys have ever taken a look at a Wyckoff pattern, let me see, pull up a Wyckoff pattern. It basically, it's a base that's being built, and this is a great example of a, nice base that's been built in the dollar Canadian, right? Then we push to new lows, which is basically, stops everybody out. Then you get a move up, consolidation, and then eventually move higher. And that's what I think is going to transpire in the dollar Canadian going into the second half of the year. Or hell, maybe it happens all in the next 3 weeks. I don't know. I'm just kind of guessing there. But the point I'm trying to make is, and I just deleted a bunch of stuff that I didn't want to delete. The point I'm trying to make here is that we're coming out of a descending wedge, and it looks like that we're going to push towards the 129, 130 level. Without getting too technical into everything, I want to make a couple of observations. We ended Friday basically on the highs with the dollar. Okay, so if you look at the dollar index gave us a lot of cues this week. We didn't hit a lower low, so it's a higher low. We have a hammer on the weekly chart. But also take into account that we also wrapped up a week on on Friday. So on Friday it was the end of the month, excuse me, is what I meant to say. The end of the month. So maybe there was some end of month dollar buying coming through at the same time. So the reason why I point that out is because the dollar should have some upside momentum going into early next week. Because if you look at all the weekly candles, pretty much in every currency, I mean, look at that shooting star in the sterling, Aussie, outside weak, Kiwi, Gravestone Doji, dollar Canadian, false breakdown, bullish outside week, US dollar Norwegian krona, that is an extremely bullish candle on a weekly chart. You just look around and the dollar looks extremely bullish. But that doesn't mean that the first few days of this next week we aren't going to get a pullback in the dollar. And what I'm going to be looking for, to be frank with you guys, is just to see how the dollar reacts on some sort of pullback. So if you're looking at the euro, what I mean by that is, and let's just hone in on the euro, and then I'll wrap some things up with some final thoughts. If you take this low from the euro down below 120, which is 119.50, 52, I think what it was here, and the high at 120, 122.44 or 43, the 618 retracement came in at 120.60, pretty much where we closed the week, right? So my 2 cents is we're going to open the week and we're probably going to trade down a little bit, maybe down to the 78% retracement, retest these lows. And then what I'm more curious about going into early next week is how, if we get a bounce, and I'm just mapping this out for you guys, how I see it, which, by the way, is not a prediction. I like to imagine, and this is how I trade, guys, so just bear with me as I explain this. Based on what I see and correlations and many different things in the marketplace that I take into account in my own head, I like to envision what I think is going to happen. I'm pretty good at it, and that's why many of you have listened to me for nearly 20 years, is because you're like, oh, Blake's got a good handle on where he thinks the market's going to go, and it tends to go there more often than not. And I don't pretend to be fortune teller or anything like that. All I'm trying to do is envision where I think it's going to go. That doesn't mean it's where it's going to go. But if it goes in the direction that I feel it's going to go, I tend to be more confident in my trading. I tend to be more aggressive in my trading as it's working in how I believe is going to happen. Okay, so the reason why I say that is because, I think we had a lot of selling pressure in the euro, or buyers in the dollar going into the end of last week. I think you're going to see some spillover that into Asian European trade on Sunday, Monday, and then I think the dollar is probably going to pull back a little bit. But what I'm more curious about is, will the dollar pull back, or the euro rally, for example, and make a lower high, or in the case of the dollar, we would come down, make a lower low, or a higher low, excuse me, and then build for an eventual move higher in the dollar. Because I do believe that the strength of the dollar going into the end of last month, or last week, was pretty powerful. And if you look at all the currencies out there, whether you're talking about the euro, the sterling, the Aussie, they all, and most of them, I should say, most of them either did a false breakout, false breakdown. You can take a look at the charts. I don't have to go through them all for you. We hit some pretty key support and resistance levels, and we reversed. And that more than likely has the attention of a lot of traders and institutions out there. And let's also keep in mind the dollar made a higher low. which doesn't necessarily mean there's been a trend reversal, but it does mean that we're at least, if not reversing, we're consolidating some more. So that, when you look at the dollar, it doesn't necessarily mean that we are reversing, but that does mean that this consolidation will continue. And based on what we're seeing here, probably means that we're going into some sort of wedge pattern, which will eventually break higher if we have consistent highs and higher lows. So that's kind of how I see it over the next several weeks. I could be wrong. The dollar could absolutely explode to 93 like next week, and I'll be like, whoa, I didn't see that one coming. All right, so just think about that. All right, a couple things that I want to point out. Whoops, I clicked the wrong button. I meant to go right to the dashboard. Let me mention a couple of things going into this next week. Oh, and since we're here, this is Data Flash. It's included with your ForexAnalytix subscription. It is. I've paired it up against Bloomberg for many years, and if you're a news trader, which I'm not, but if you wait for the the live news events to come out, and as soon as they come out, you make a decision, just use Data Flash. It's just as fast as Bloomberg. I don't see why people would pay for Bloomberg for breaking data anymore. Also, if you use LiveSquawk, or ForexAnalytix, you get a discounted rate on LiveSquawk. So make sure you can take the trial. I have a house account that I need to tie into mine. I just haven't had a chance to do it because one of my colleagues is out and was out this last week. But with that being said, all the analysis, if you are a ForexAnalytix subscriber, all the basic technical analysis was done by me personally, and it's all up as it's all fresh now. So anything that you pull up, whether you're say you're taking the Kiwi dollar, the end of week analysis is valid and written, and charts are by me. So just letting you guys know. All right, speaking of next week, you can follow along on your calendar. Next week, there's a few really key events going into this next week, and I actually have to. This is this week. We'd have to go into the next week. Push through. But a couple things that are coming through this next week is we have it's a jobs report week for the U.S. right? So on Friday we're going to have the jobs report. We have the RBA rate decision, which will be Tuesday morning in Australia. And remember, there's been the movements that we've seen in the bond markets have not only been in the 10-year or the 30-year in the U.S. Treasuries. It's been globally, and a lot of talk about what Australian bonds have been doing. And so let's see if it got the attention of the RBA, and they make some comments on that going into next week. We also have Australian GDP, which will be Wednesday morning or Tuesday night if you're in the U.S. We have Canadian GDP Tuesday as well. And then also we have, the ADP non-farm payroll, so the private jobs report on Wednesday. We have ISM services data on Wednesday in the US. We have crude oil inventories. RBNZ Ore is going to be speaking Thursday morning in New Zealand. So just keep that in mind if you have any Kiwi exposure. Fed Chairman Powell speaks on Thursday. He's speaking at a Wall Street Journal panel. He's going to be asked about the U.S. economy. So, a lot of people wonder, does this move in yields or in the bond market, is it getting the attention of Jay Powell and the rest of the Fed? My opinion is that they probably see this and will continue to view it as a positive indicator that the market believes the U.S. economy is improving. A lot of people wonder if he's going to start exploring, controlling, yield curve control, especially on the longer end. But I, like most people, believe that we are far away from that. I don't think that the Fed's even going to go there. But once we even have a hint that the Fed might implement some sort of yield curve control, and especially, towards the longer end of the curve, just realize at that point in time, that's probably the time that you do not want to be long the dollar at that day, on that day, if it's ever, the market ever feels that way, and you probably want to be long gold, would be my best guess at that point. But we'll cross that path once we get there. All right, guys, I've rambled on long enough. My name is Blake Morrow with ForexAnalytix. I hope you enjoyed today's video. And remember, please like, share, and subscribe to this video and to our YouTube channel. Share this video with, wherever you saw it on social media. Retweet it on Twitter or, LinkedIn. And I want to thank you all for your continued support of ForexAnalytix and our team. So have a great weekend. Thanks.